Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I just wanted to go through kind of a trade setup, and I wanted to keep this one a little bit simple, maybe for the beginners out there who think you might need a million indicators or aren't really sure what they're doing. They're just following these gurus online who are constantly pumping coins. And, if people are just constantly pumping a coin, over and over again, for newbies, they might buy it here, they might buy it here, they might buy it, anywhere. They might buy it, up here, they might buy it here. So again, like the thing is that when you're listening to people on Twitter, you just have to be very careful. A lot of these guys are already holding their bags. Maybe they bought up here because they thought it was a good value zone and they just didn't take profit, so they're still holding their bags even while it's underwater, right? I mean, other guys, they sold for a profit and they just understand that there's a huge amount of gains to be had in a certain coin. And so if you're, listening to these guys, you may not know what time frame they're trading on. Are they trading on the weekly? Are they trading on the monthly? Are they going to hold it for a year or two? Right? Or are they trying to flip it within like a daily period? Or are they, even just doing like a 4 hour trade or something like that? And so the first thing you have to understand is that, whenever you see a coin online, that looks like it has potential and somebody has it charted out, you have to understand what's the time frame that you're going to be trading on. And it's very important. If somebody didn't tell you their time frame for the trade, then automatically stop listening to them because they're not giving you enough information even to begin with to understand what they're talking about in terms of when you should be buying in and when you should be selling. So in case of the chart that we have in front of you, I have the daily on. So what does that mean? That means that we might be taking trades that could occur over a series of, weeks or even months. Okay, so the smaller the time frame, a time frame generally has a huge magnification on it, right? If you're playing monthly charts, then probably you're in something for a year or two, okay? You're probably going to be hodling that coin. If you're playing the daily, then you're probably at least going to be sticking around for a week, if not several weeks. And of course, if you're playing the hourly, you might be checking up on it throughout the day. And maybe you're going to close your positions, during the evening before you go to bed or something like that. But in general, you need to know what time frame you're operating on. And if you're just listening to, gurus trying to like pump certain coins, then you're going to get screwed over because you don't know what time frame that they're talking about. You don't know where they are setting their profit points and what their buy-ins are in. If you're just looking at these posts online, which just pump something, but they don't give you any technicals to go along with it, right? So let's put some technicals on the board. Personally, I don't trade under the daily unless I'm really sitting at my computer all day long trying to catch a coin that's a very fast moving coin. And I'll show you an example of that. I was in this trade, Zilliqa, while it was pumping way up here, right? And you can see I've got some lines up here because I even squeezed out as much as I could up here, right? And, just for context, right, that was a 200% gain, right? 200% gain. So I got into this coin around 4 cents, approximately that area, based upon some analysis that some of my friends were doing, you know, um, Crypto Athena and Crypto Reda around, 3.5 cents. And so, basically, you become aware of a coin, and then you have to choose your time frame. What time frame are you operating on? Well, you know, we established that these were relatively good levels to be buying in based upon the history of the coin. And you can do that by going back, onto a longer chart. So, many of these charts, they actually don't have as much information as other charts. So if you're using TradingView in order to trade, you're going to want to make sure to double check which chart you have in front of you. So this chart right here is Zilliqa from KuCoin, and then this chart is Zilliqa from Binance, okay? And as you can see, the Binance chart has a lot more history, right? So if you look at just the KuCoin chart, you might think, oh my gosh, Zilliqa is a falling knife. It's falling to hell. Why would I want to get into this shitcoin? Like why would I want to buy into something that's falling like that? But if you do a little due diligence and take your time to, search the different charts that are available on TradingView, you're going to eventually find the oldest chart, okay? You're going to find the oldest chart. And you can Google how to search those things. That's not what this episode is about, okay? So I'm assuming you know a little bit about trading or that you can use Google to fill in the gaps. But basically, you find the oldest chart that you can, and then you can see, aha, this chart doesn't look that bad. Look, there's kind of a midline here, right? Let me just turn it into something a little bit more colorful. There's kind of a midline that runs through this where there's this, cup down here, and then it kind of came up here. And so it's finding, support around the areas of this wick, right? It found support here, and it's at these kind of like value area lows, where if you took a look at this, just this body of price movement, it looks very similar to this body of price action before it pumped. And it also looks very similar to this price action before it pumped. Okay, so this coin has a history of this type of price action before it has a massive pump. And you can say, well, look, maybe I don't want to buy in exactly at the bottom because I don't know if it's going to keep falling down. This market could be crazy. But you can also say, okay, look, it has a little bit of a node over here. It has a little bit of support down here, and it has a lot of support, at this area. So the one thing that you know is that if this coin does fall down lower, it's probably going to get hung up on some price action right about here and then right about here. So, you may lose some money if you don't have a stop loss, but you do have some support below you. And so, again, it's not a falling knife chart because a falling knife chart has no support below it, right? A falling knife chart will go into price discovery to the downside if it breaks its current support, and then you can just you know the floor is the limit, right? Like the hell is the limit. You can just fall to hell. But if you're choosing coins that do have price action below your current price action, then you at least know you're probably going to get hung up on some price action below you, right? Or you're going to, and that eventually there's maybe some solid footing somewhere, okay? And that's probably going to be the value low for the chart, even if you bought in a little bit high. But at least you aren't buying here, right? Or at the top of the market. You have some kind of logic as to where you're buying. And if you examine the past price action, you can say, okay, I think I think that this might be, a place that's worth taking a shot, given that this thing has been basically accumulating for, like a year, right? So this was right. So yeah, this was April 2021, right? So we're a year later. And so, there's cycles to these things. And if you research the project and do your due diligence on the project and don't just take, the guru's words for it, you have to get a little bit of background on the coin. Are they still working on the project? How are their socials? What are their tokenomics? Does it look like they're done dumping all their coins? Is the project still alive? Or is the dev team still working on it? Does their website look nice? And is there any potential in this coin? Then you can go ahead and consider to take an entry. And then, of course, I would recommend putting a stop loss wherever you feel comfortable. If you can stand to lose 10%, if you can stand to lose 15%, if you can stand to lose 20%, or if you just want to put it at these supports just to make sure that you don't fall through, just in case it doesn't get hung up on it if the price goes lower, then you can make that decision for yourself based upon your own risk management. And so, again, the first step is to really examine the history of this coin and what it's about. You don't just rush into something that somebody's pumping you on. And then, of course, you're gonna do your risk management, right? And you're gonna double check that it's not a rug pull and that everything's cool, and go through those things that I mentioned. And if the coin still seems alive, and if it looks like it has a lot of potential, and if they're not screwing people over with weird tokenomics, and if it does have support below your price action, then you can consider perhaps to take a small position, at an area value, at a value area, low, not a high, right? You don't want to chase a pump. And so don't buy in right here. I mean, you can do whatever you want, but chasing pumps is usually a way, to get wrecked in the long run, right? These things always tend to retrace, and so buying a value area low is very important. And with a good stop loss, you can calculate the upside of taking out the previous high versus where you might fall and where you might get wicked out, in case the thing does start to dump, right? And so, something like, a risk of, one possible unit of loss versus three possible units of gain or five possible units of gain, then that's a pretty good risk to reward ratio, right? And over time, if you are doing better and better in your trades, then, as long as that ratio isn't like 50-50, as long as it's much better than 50-50 on the winning side, then you should be doing relatively okay. And don't put a big position on something that you're not familiar with, right? You want to understand how the coin moves first. And so if we look at a coin like QREDO, right, one that I've analyzed a lot on this show, you might say, okay, well, we have this price action that's kind of right here, right? And let me see. We're finding this type of support right here. And you can see that even right here, right? You have this kind of diagonal, similar to Zilliqa. You had that support. And then you could also see this type of support, and these are just kind of diagonals. I like diagonals, but you can also imagine it as horizontals. But if it's a bullish chart, which means that it has, it's been building these kind of like higher highs, and this was a macro low, right? You want to find those bullish charts, right? You don't necessarily want to be catching the falling knives. You want the bullish charts. You can see there's kind of a macro low, there's a macro high, and then you can imagine we're putting in a macro low, right? And if the price action is kind of moving up this way, you can see this wick and this wick and this price action and this price action, and it has that diagonal to it. This price action, these wicks, this price action, it's moving upward. So even if we were here and you hadn't even seen this stuff, you can imagine this diagonal this way. And so you might imagine that the floor of it is like this, and the top of the channel is like this. And so if there is going to be, some type of a wave structure to this, then maybe your upside is over here, right? I mean, and it could take months. It could take months. Again, you have to understand what time frame you're trading on. So if somebody is pumping you on this coin, and it's January, or they're pumping you on it and it's, and you're up here, you just have to really examine the chart for yourself and understand, well, hey guys, like we pumped a lot. We pumped a lot and we have a lower high. So we have a lower high, we're not making higher highs anymore. That means this is kind of indicating the top of our chart, and we already know where the low is because the oldest chart has the low down here. And we can start to see, let's say that you're over here, right? Somebody's selling you on a coin over here. You just see it on crypto Twitter over here. And you can see this diagonal and you can see this diagonal. You can use your own brain and put two and two together and say, hey, I think there might be this kind of a channel yeah, it's bullish, it's in an upward direction, but do I really think that the next step after touching the ceiling is for it to touch the ceiling again when it missed it this time? Not likely. Most likely, if it's rounding at the top and it's falling down at the top, but it had a super pump, right? Because this thing pumped 1000%, right? I mean, how greedy can you be to want more out of a coin? It pumped 1000%. And people are trying to push you into a coin in like January after the top of the market when Bitcoin's in a bear trend. I mean, you just have to question like what people are thinking. So, they may be taking a short-term trade. And by the way, this isn't to question anyone's, ethics. The whole reason I started this episode is by saying you have to understand what time frame people are trading on, because what if they were telling you to buy in right here? And what if they had the idea to take profit on some type of relief rally? So you can see price goes up, price goes down, price goes up, price goes down, price goes up. If you made a low after making a high, on a shorter time frame, then within like 1 week or within like a couple days, there could be a nice trade from this local low to the next local high, right? And so for all you know, this guru is telling you to get into this coin because they want you to make 30%, which again, like it doesn't mean like they're bad, people or anything. You just need to know their time frame. And if they're not sharing these time frames with you, you have to learn to ask or just question what you're reading because you might end up getting trapped into this coin during its macro cycle, during its weekly cycle or its monthly cycle, right? And that's something that, a lot of people on, crypto Twitter and elsewhere end up doing. And so it's very important to have these concepts in your mind if you're new. Because let's say that you do fall here, and now, again, probably, these guys probably bought in, here, or they bought in on the fall because, maybe they're trading this thing, constantly. And so they're seeing a whole bunch of things, they're seeing a whole bunch of plays on like the 4 hour or something, right? Like here was a play, here was a play, here was a play. And so, maybe they bought in, on this area, and they're going to champion their coin because they love this coin. They know the chart, backwards and forwards, and they're taking a lot of profit off of it, right? They're just taking a lot of profit off of it. Every one of these pumps could be, 10% or, 20% or 30%. But if you don't know what you're doing, you might be very seriously underwater at this point, right? You might be, 60% down. 60% down. Like crypto banter, right? That banter ran banter from crypto banter. He bought up here in the like $9 area, right? That guy just had to hold his bags all the way down. And so, when somebody very famous or somebody influential, or somebody that people trust, like are talking about a coin when it's like $9 or when it's, $7, of course, people who are new, they might get into the coin and think that it's at a good value area for a long term. And again, like just like I mentioned in the last episode, like these are things that you have to learn and you go through a process. I did the same thing. Like I was so happy with trading this coin from $1 that I was making posts about it and making predictions because you get blinded. You get blinded. If you get married to a coin, you get blinded by it. You made money here, you made money here, you made money here, you made money here, you made money here. You just have this belief in you that you're gonna make money again and again and again, and that you're gonna, go to the moon, right? 4,000%, whatever, right? And it is possible. It is possible. Like we got 5,000, 6,000, whatever 1,000% off of Cadena, right? and I was in and out of that trade ever since it was 36 cents all the way up to like $20 or whatever. And so I did see that 5,000% run. And in a bull market, your influencers or whoever's you're reading, whether it's somebody else, whether it's me, whether it's anybody, right? They're human beings, right? And so you need to start setting a standard for the information that you take in, because if you bought in here with the hopium that these guys who already made a shit ton of money on this coin or some other coin, if you buy into their hopium and their kind of religion about this thing while it's 1,000% up, then you're gonna end up getting screwed. You're going to end up getting screwed because eventually gravity pulls these things back down. And eventually, you're going to have to pay the piper in terms of a market correction. Because again, like a crypto doesn't operate on profit and loss. It operates on kind of, hopes and dreams, to be honest. Like most of these things don't have, functioning products that could justify their market cap. I'm not saying that they don't have good products. I'm just saying that their products don't justify their market cap. Okay? That's a totally different thing. A market cap is kind of the amount of money that's in something, right? It's sort of like when stocks get overvalued. Okay? Just, obviously it's the coin's price. And but with stocks, you can at least measure them using fundamentals of the profit and loss. In case of these type of coins, you're just not 100% sure, and probably after something 5x's from its launch, it's probably overheated. Okay, like you could like 2x, 3x, 5x, but whenever things kind of go over that from its launch price, take your profit and consider that the coin might be overheated. You can leave a moon bag, that sort of thing, but watch out for anybody who just has like insane hopium, right? It just don't fall for the cult, okay? Don't fall for the cult. Wait for, a value area low, or a good price basically to enter on. And so you can make these type of diagonals on your chart, and you can start to, let's say that you were right here, right? We didn't even see this price action yet. And so, let's say that we're right over here, right? And you can say, okay, look, we have this kind of horizontal support, running through here, right? Like here, you see this horizontal line, there's kind of support in this area. And maybe there's a little room to fall, but you got a lot of support right here. Way more support than right here, right? Right here, there's like no support. But down here, there's a whole bunch of support. And you might say, well, there was support up here also, but we fell down, right? We fell right through it. So you have to understand that, especially for new charts, these things are very brittle. They don't have a lot of price history. They don't have a lot of price history, and so these things just do not hold up very well. The price action might touch it. See, this spiked to this price level, and this like poked down to this price level, but it's still kind of discovering, what the market supports. And so if you're here in this price, you have to just think for yourself and say, okay, well, if there's going to be a diagonal support like this one, we can see that like this area that was very similar to this got flipped into support when we touched it, right? Because that's why I like diagonals, because I think that they sometimes line up better than the horizontals. Like if you're just using the horizontal, you might think that, the kind of the middle of this area is your support. But if you think in terms of diagonals, you can kind of see that actually the price action is moving up over time. And so, in fact, your support is more along this kind of diagonal. and that's where we bounced off of, right? But you can use the two together. Like just again, you can look up on Google or on YouTube support and resistance. I'm assuming you know a little bit about that already. It's kind of like the most basic thing when you start getting into like looking at charts. So make sure to look up support and resistance. I'm not going to go over that. I use the 5-day, the daily, the weekly, and the monthly. You can use whatever you want, but basically you can like change your time frame to the weekly chart, and you kind of look for where this like price action is, and look, we wicked right there, right? And conceivably we would have support here where either all these wicks are, all this price action, or at least where the candle bodies are. And then around here there's just not that much support, so it's just kind of, you wouldn't really know, right? But if you create a diagonal concept where you can see that this price action is kind of operating on a diagonal, then you can understand that it might be bouncing off of a diagonal, and it's just a theory. You always want to be able to change your mind because it's not always going to hold true. You might have to adjust these things in the future. Don't just assume that you're right the first time, especially with new coins, okay? With old coins, it becomes a little bit more obvious. But let's go ahead and just play this chart and see how it goes forward. There might be some spikes. Look, it went right up to here, right up to that diagonal. What a coincidence. And then it's coming back, and look, it spiked right down to, it spiked right down to my diagonal, which kind of proved, right? So this was, I think this wick and this support and this, wick right here was proof enough that this channel exists, that there's a channel here, that there's a channel down here, and that there's this mid channel, and that we are in the mid channel, okay? And if this mid channel is aligning with the bottom, then we can assume that it might be a low, especially if you later on get a confirmation, right? If you get a confirmation here. So again, you have a lower high, but then you have your low gets put in. You have your first real macro low being put in after this one. And so you have a higher low, and then you have another higher low, and you can think, okay, that might be a good place to buy in, because if I'm thinking about this in terms of a wave by everything that I've already, conceived, then I can see that, it's probably going to operate something like this. It's got this bullish chart orientation to the chart, and I have proof that I'm at support, and I also have a higher low indicating that this new support area being formed, that it's in a bullish direction. And so I can consider to start buying in, right? Of course, on a very small time scale, you had this low and then you had a lower low here. I mean, sorry, a higher low here and a higher low here. And so you could have bought in this area also and taken advantage of this trade and sold at the resistance. It's just you didn't have proof of it yet, right? Because this chart is so young. You didn't have proof of it yet. So don't feel bad if you didn't get that trade. It's okay if you didn't get that trade. There's always going to be another trade. You never have to feel like you're being pushed into a coin, or that you're part of a cult, or that that an army is trying to push you in one direction or not. You can just use your own logic and you can take a look at it, because a lot of the time these coins just retrace, right? They just retrace, they retrace, they retrace, they retrace, they retrace, they retrace. Usually you have a second chance. And so the first chance is for learning, and the second chance is for trading, right? You don't have to be one of these guys who constantly brag about buying the absolute pico bottom of something, right? Or selling at the nano top, right? I sold at the absolute top. Shut up, man. If you sold at the absolute top, like, you're just lucky because you had no idea where it was going to go. If you bought at the absolute bottom, I mean, shut up, man. Like, you had no idea if it was going to go lower or not. You had to get some type of confirmation of the bottom, right? You had to get confirmation that you were moving up, or that you were taking out some of these lower areas on a lower time frame. Like this might be kind of a daily time frame. You're just like a day by day watching the chart. And this might be like a, a monthly time frame, and then this area might be kind of a weekly time frame, right? And so if you're taking a look at these things, I personally find that the daily chart is the easiest to kind of understand and have a life balance. So I'm constantly on the daily chart, and you can flip back and forth between like the 6 hour and the weekly, those type of things, and kind of get an idea of what's going on, or whatever your favorite time frames around a day are. But basically, if you have your time frame, choose a couple time frames around it and stay off the really low time frames and stay off the really high time frames because you're just going to end up confusing yourself. If your chart makes sense, you know, on the time frame that you're operating on, then use that logic to figure out where you might be buying in on a retrace. And if the chart is bullish, it should be a higher low, right? So you're going to expect some type of diagonal buy-in. You don't want to set your buy-in at the exact same low of its previous low. You might consider just a little bit higher because, if it's a bullish chart, it might be moving up, right? And just like if it's having a downturn, it might be a lower high. And so if you're trying to sell something and you missed selling the absolute top, you can wait for a retrace, but you just got to know that the next top, if you feel like this is turning bearish, right? If for some reason you think there's like this bad news or something, if you think that you may need to sell, or it's just at a good profit for you and you want to sell, and you missed the absolute top, then you just look for the next top. And in a bearish downturn, right? In a downturn, it's going to be a little bit lower. So you just set your expectation a little bit lower, right? And how would you know that you're even going to be breaking, this downtrend? Well, you can, just basically figure out, what is a downtrend, right? What is a downtrend? Again, you can look up these things on, Google. And so you're going to just establish some type of trend, a couple points, 2 or 3 points is pretty good. And you just want to see if you break out from it. Well, you got rejected here, right? You got rejected here, and you got rejected here. And so you can think, oh, okay, I'm going to have another buy opportunity. Let's see where this thing goes. All right, so playing forward. Oh, look, you got rejected again. Oh, look at this. You got a breakout, okay? But what you'll notice is that the price action, again, for your buy-in was a little bit higher, right? A little bit higher. And here's the one that you're measuring it off of, right? And so you do have this bullish direction. And while this might be where you can catch like some type of a wick, you could understand already when you saw that it was just a wick over here, that this was the body, the body of the candles. You probably want to put your buy orders where you would expect the body of the candles to line up with, right? So that way you can be sure, or relatively sure, that your order is going to get filled. Because if you put it just where like one wick is sticking down, there's a high likelihood that in the future somebody may front run you, right? Like they're going to learn, the bots and the traders are going to learn from these previous price actions, and they're just going to front run you. So you can move, on whatever time scale you're trading on, which is the first thing that you have to decide, right? You have to understand that you can move that you're looking for the candle body closes primarily because you want to be able to catch that action, and you also want to be able to sell. So if you're aligning these things in some way, you want to align it with kind of the candle closures. And you might have some goal in your mind now, right? Like, oh, okay, we're breaking this downtrend. And so most likely we're going to be going on an uptrend, right? Soon, soon. Now, you also understand that there's the risk that we could have a failure and that we could just break down and this could be just another lower high, right? But this is usually a good sign that you have a breakout, of your downtrend because you're literally breaking the downtrend, to the upside while you're bullishly making higher lows. That's a good sign. That means people are accumulating. It means people are buying and the price is slowly going up and you're being forced into a wedge that has a good likelihood of popping up because you broke your downtrend and because they're accumulating up. It doesn't have to go that way. You could, like people could say this was a wedge too, right? Like you could be confused, right? Like a wedge doesn't necessarily mean that it's a good thing, but breaking out of that downtrend, right, is a good sign compared to breaking up out of it is a good sign compared to breaking down, right? And so even though right here you might have said, oh, okay, this was a low, this is a higher low. Oh, look, right here, like it's a higher low, I should buy in. Yeah, but you broke down. You broke down from this trend, right? Like you had a trend. You have this yellow line that you established as a trend. And if you break down from it, you don't want to be in that trade. In fact, you know, breaking that line might be where you put your stop loss somewhere right under there, right? So just in case you continue to fall, which did happen once that triangle was broken, right? And so, I'm not going to go into all of that again. Like, you can Google some of these things. Like, I'm not trying to, teach you this stuff. I'm just trying to, like, just for the new people, I'm just trying to get you an idea of the things that you should be looking out for, and that you do have time. You can have patience. Don't get pushed into something if you don't understand what you're getting into. Don't get pushed into something if you don't know the time frame, the background of it, and if you haven't established a theory of the coin in your mind and how it behaves. And then you might say, okay, but that's fine. But if this thing can go up or down, how do I know that I'm timing it right? Well, you can use a couple indicators to as your friends, and I'm just going to choose a couple here for you. Okay, just something to get you started. Because a lot of people watching are just the new people in the market. And, so let's just take a couple indicators and let's use the time frame that we're trading on, okay? The one that we're primarily trading on. Now, these are great ones to start with. It's the MACD. It's called the MACD, MACD. This is the RSI. It's the letter R, SI. And then this is the Stoch, okay? This is the Stoch, STOCH, Stoch. It's the stochastic, okay? And so when you're looking at these type of indicators in TradingView, you can try to see like where are they, kind of hot or are they cool. And so let's just mark some lines. I use other indicators as well, more advanced indicators, but you can just use some basic ones. So first of all, on the Stoch, it's overheated here. You can see it's overheated. So why would you buy when it's overheated? You can buy when it's cooled down, right? When it's cool on its chart. And so let's just put a line right here, just to indicate that we have uh, a confirmation. One confirmation or sorry, I shouldn't say confirmation. I should say confluence. One confluence from the Stoch. And then you can look at your RSI. Oh, look, the RSI is also at a low there. So this might be a good area low. And then, oh, look, the MACD is turning from dark red to pink, which means that its momentum is starting to change to the upside. It's not green yet, but it's starting to change there. And so for the RSI, we had a confirmation, or sorry, a confluence right here. For the Stoch, we had a confluence right here. And for the MACD, you can see that it really started to pinch off into green territory, which means good, right? It means positive momentum. So the momentum changed from negative momentum to positive momentum. And then you can kind of time it just using the MACD and understanding that you are in a pretty good area with these other two indicators, right? The RSI and the Stoch. And you can wait, like if this thing pops up in price, you can just kind of wait while this thing cools off a bit. And because usually there's going to be, a turnaround, like I said, it doesn't just go straight up usually, right? I mean, sometimes it does, but it doesn't usually do that because it has to kind of round out. It has to round out. They don't just like some coins randomly do that, but in general, coins round, they round. They don't just spike up. Of course, sometimes it can happen and you struck gold, if you were in that trade, but that's just like gambling. You don't know when that's going to happen. Generally, they round, okay? They make these nice round oscillations, these waveforms, right? That's why you see waves everywhere in trading charts because, it's people are getting in and they're getting out. And so one person, leaves and two people come in and, it's a smooth curve, right? Generally. And then you can say, okay, look, well, I'm not too comfortable here because I've seen pink turn to red, to dark red, and so that trend could just turn around. These are pointed down, so even though they're in a good value, they're not really pointed up, all right? So what I want to do is just wait for my MACD to be really having positive momentum that is moving up, somewhere around here, and for my, my RSI to start being in an upward direction, and for the Stoke to also be in an upward direction. And then I can think, okay, hey, look, you know, I was warned. I was warned that I was possibly in a good value area here. And you know what? I'm kind of confirmed, that this is a good value area here. And so you can consider to take a risk in this zone. But you might want to have a stop loss. You might have a stop loss under that price, just in case this ends up being a lower high, right? Higher high, lower high. This could end up being a lower high and it could just keep dumping down, right? You don't know. But if you wanted to take a little risk, you could buy in and put a stop loss underneath it. And again, like a research stop loss, if you don't know what that is, right? It just triggers the price to sell if you go under a certain price. So that's a stop loss. And so on this chart, you might take a little risk there, right? And then how would you know when to sell? Like you don't want to be holding the bag if this thing flips over and just keeps going down. How would you know when to sell? Well, you can use the same strategy. Look, it's starting to get overheated, right? So you can see now we're getting up here into this area where now the Stoke is at the top. It's looking a little bit warm, right? It's like running, when your engine runs hot, right? And you get the arrow pointing up. Like you're starting to run hot. Your RSI also is peaking there, right? So you've got like a two red flags. Like this is your warning. You might want to start taking your profit. And, your MACD is starting to change momentum to the downside. And so you might just consider that, hey, I have these red flags. The momentum is continuing to go down and I can sell somewhere in this region, right? Like that's just your warning. It could still go up, but that was your warning. And then if you see that it's starting to make lower highs, right? You can see it had kind of a pump right here. And, it definitely had a lower high here. So you can even think right here, right? Where your MACD is starting, it's almost going to turn red, right? And so you can think right here, okay, this is a lower high. And what do I know about lower highs? They tend to precede a downturn, right? Also, we had a peak right here, and so we were able to draw a trend. So this was your downtrend. You had 2 points right here. And then when you bounced off of that a third time, it was definitely your signal, get out. You have a downtrend, 2 points, and you're under the downtrend, you got rejected from it, and then you got rejected again, get out. Because probably everyone else is going to be thinking the same thing. And so they're going to get out as well, and you're going to get left holding the bag if you don't take some profit. So probably you can take some profit right there, right? And so that's going to be your nice profit zone. And, let's say that you got in late because you're just a new guy in the market, right? And let's say that you got out late because you're just a new guy in the market and you couldn't catch the absolute bottom, you couldn't catch the absolute top. Hey, no worries because you're using principles, you've got a game plan. Hey, check it out. You made, 25 to 30% off of this trade, right? Maybe even 40 to 50%. That's an incredible amount of money that you just made, all because you used common sense. And when you bought in, if you used a stop loss, maybe you could have lost, 5%, 10%, depending whatever you're willing to risk, right? And you had a theory that you could gain as much as, you know, that you could gain as much as 70%, right? You had a theory, well, let's just do the whole channel. You had a theory that this whole channel could have been 100% gains. 100% gains. You could have doubled your money if you got the absolute bottom and the absolute top. But you're being reasonable, not greedy. So you're using confirmations and confluence to trade. You're not just being a gambler, right? You're not just being a gambler where you might hold the bag and you got stuck with it. And you're also not being a gambler where you just buy the bottom, even though we could have just continued to keep going lower, right? And then you would have been holding it as well. You used confirmations and confluence, and you had a trend and you had a macro trend to understand that this was a bullish chart, and you made a wise decision. You didn't just follow like shitty, pump groups and stupid armies just trying to constantly making you think you need to be in something. You don't need to constantly be in something, right? And you can understand that this thing didn't even break out of its trend yet. And so maybe you didn't even need to be in this, in this coin at all unless it started to break out of this downtrend. Maybe you could have just said, look, I'm going to wait until basically today, basically today, guys, like if you look at this downtrend, and by the way, you could repeat this process over here and then you could make, 12%, right? And you can ask yourself, do I really want to be in this coin while it's being wedged? And I know from the history of this coin that when it gets in wedges, right, I've seen it happen before where it gets into wedges and it breaks down. Could this coin do that again? Well, if you listen to the pump armies, they're just going to say, oh, no, 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 only up, up, up only, right? Up, up only. Meanwhile, everything else is like pumping like crazy in the market, but this one is still under its diagonal trended down. Like, just don't listen to the noise. Don't listen to the noise. Okay? Think for yourself and make your own plans. There's a high risk that this could break down again, right? There's no guarantee that it goes up. You're a new trader, right? You don't have the experience to know whether this one's going to go up or down. Maybe you don't know how to interpret tokenomics. You don't have to ever feel like you're being, emotionally manipulated to be part of a club in order to be in a trade. But if you do see that it's breaking trend, look, just today, right? Just today, just yesterday, it broke trend. And you could see this was another good value area to buy, right? Right here and right here. Like these were good value areas to buy. And you kind of learned that you had support, right? You came down and you bounced here. And so you see this second confirmation, right? See this? This was your low. You wicked down here. You don't have to buy that. You don't know if you're going to crash down or break down from this triangle. You can buy this second one, right? Just buy the second one. And if it bounces above this one, then you're in an uptrend, at least on the local small time scale. And then if you get to your diagonal, right, your resistance line, then you can go ahead and get out. You don't have to hold these coins forever. You don't have to be married to these coins. Just because some stupid army or some pumpers, are trying to like tell you like that this thing's going to go to the moon, you have no idea what's going to happen tomorrow. Feed your family and buy in on a retrace, right? Use logic when you buy in. Don't get pressured to buy in. Use logic to buy in and then sell and feed your family, right? Buy on a retrace. to get back in, and then you keep your profit and you buy in a retrace, and now it's almost like free money because you almost doubled your money, right? So it's like free money now. And every time you do that, it's like free money, right? But people just tell you to hold something, we're going to the moon. We could have a downturn, we could have a nuclear war, the Fed could crash the market, anything could happen, and you're going to be just left holding a bunch of worthless tokens when you could have been putting food on the table. And I don't mean to be too critical on these type of things. It's just that it's a really important lesson, to take profit and don't be manipulated by people who are trying to like push you into things. It doesn't matter if it's the greatest project on earth. The only reason you're in this game is to make money. And so trade it, Don't hold the bag forever. Once you break your trend, which only happened yesterday, right? Like it honestly only happened yesterday. If we use the linear chart, you could say it happened, here. Like you could say it happened here. So a linear and a log, it has like a multiplication factor, okay? So all the lines get messed up when you switch between a linear chart and a log chart. Please research logarithmic chart versus linear chart if you want to understand that. The reason I'm using the log chart on this one, which by the way, if you look at the chart, it makes sense, right? Like this lines up. So anyone using the linear chart might have thought that, they were already broken out, but in fact they were not. And the reason why I'm using that logarithmic chart for this coin is because, like I said, it already pumped 1,000%, right? You could use this wick down here, right? And it pumped 2,500%, right? Sorry, 2,000%. So if this thing is in like the thousands of percents, hundreds and hundreds of percent up, then I use the log scale because just mathematically it gives you more of that exponential chart, right? That kind of parabolic. It captures the parabolic movement, whereas the linear chart it looks like this, right? So let me take off these drawings. The linear chart it looks like this because it went up 1,000%, right? Whereas the logarithmic chart it just kind of flattens it out. And so you can get more of an idea. And a lot of the times, anything that's pumped like several 100%, they'll be being traded on the logarithmic chart. But always flip between the linear and the logarithmic because sometimes you can be wrong, okay? And they give different outcomes. So that's also a tip that you're going to have to learn while you're trading. But so let's go ahead and just let's see. Do I want to save any of this? No. Let's just go ahead and keep playing, right? So fast forward, we broke out, and then we're still under the we're still retesting. We're still retesting this chart, right? We're still retesting. And you can say, okay, well, we broke out. By the way, we were doing a replay. If you don't know this function, it's called replay. So on TradingView, you can actually push the replay button and you can set it to, wherever you want to replay to, and it just rewinds. And so, on a replay, if I refer to like today or tomorrow, it just means on the replay. Okay. So here we are, and now we're breaking out. Like let's say this is today, right? And you're at a good value, so you're gonna buy in. You're gonna buy in based upon the gamble that you think that this thing has a bullish chart, right? You have some logic to that. You have proof that it's kind of moving bullishly on this way, but you know for a fact that it's broken down in the past, so you don't necessarily even need to take this chart, right? You don't need to even take this trade right now. You could DCA in and then have a tight stop loss just in case it breaks down. But let's say it breaks out. Boom, okay? Now you just use the same logic. Just use the same logic to decide to sell at this top. If it turned around, it turned around, okay? And let's see, where are we? Okay, yeah, we're right here, okay? Basically, it retested the trend line bullishly. So sometimes coins, when they break out, they might break out like this, and then they come back to retest the trend line. Others might just take off, right? Just just blast off to outer space because they've been under tension for so long. And then this one basically is retesting, its support for whatever reason. Okay, like different coins have different behaviors, and you just have to understand the behavior of your coin. And so that just told you, basically just do the same thing. Just do the same thing. And if you examine this closely, because now you're out of this downtrend, and you may not know what's going to happen in the next era of this coin, just pay attention to the structure on the actual coin itself. And you can do this for various timelines on it, right? You can create your own trend even for this little movement, right? This little movement. Look, it had a high, right? Which was pretty in line with this area where you took profit before. So that was already a cue to take some profit, okay? And then you would have checked, okay, yeah, we're overheated on the Stoke, we're overheated on the RSI. And then look, we had a second rejection and a third rejection, and we're also losing momentum. And so you're going to say, hey guys, stop pumping this coin. Take your profit, feed your family, right? If you're a real trader, then you're going to take your profit and feed your family. You're not just going to operate on hopium. And then you can see that we have a neckline here, right? We have a neckline where we can either get, because now that we have this thing here, it got rejected, right? Once we got rejected from this trend, you just need 2 points for trend. You got rejected and you broke down at this kind of support that you had been making, even on this little local level, right? Just 1, 2, 3, 4, 5 days. So you're basically in day 4.5 of the structure. And, no one's going to tell you this stuff. You have to think about it for yourself because, again, like everybody has their bags. They wanted to go to the moon. They're thinking about that 1000% they already made. They're very greedy for like $20 or $100. They're not thinking about putting food on your table. They're thinking about becoming millionaires, right? And so as soon as you broke this neckline down and you were in a downtrend still for several days, like you could know that that was your last chance to sell. Like first of all, you had a pretty good clue that you were in this area to begin with. Like you were in the selling area and you had a wick down to begin with, right? You already got rejected from something, but it could have been a bullish retrace. It could have done something like this, right? And again, this is multiple days, so we're not like talking about minutes. We're talking about a week here, right? We're talking about a couple weeks that you waited for this move. And so, hey, I mean, 50% profit, 50% profit, that's pretty good. You can feed a family for a month if you're trading right, right? And using these principles. Yeah, you're not going to be a billionaire overnight with that, but if you're using these principles, you can feed your family for a month from the gains on these type of things. And then, of course, if you break this neckline of this type of support that you built, what does that imply? That you're going to go even lower because you made a high, and so now you need to put in a low, right? High, low, high, low. So of course, guys, you're going down. You broke down, right? You broke down, and so that was the last time to take your profit. And then you would already know, right, in your head, you would already have in your head that this is your support. And previously, you already had like some indication that this was a good buy area. And so you would probably, again, like on a diagonal, Like your buy area kind of moves up each time, right? If this chart is bullish, it moves up each time, and you just set your stop loss below, in a reasonable area below it. You can look where it wicked before and just put like a stop loss slightly below where it wicks, just so you don't get, you know, just so that they don't steal your bag, right? These market makers, when they wick too low, they can like trigger your stop loss and it forces you to sell, and then they pump back up. That's why you see these wicks, right? And so, you could grab that buy. And this just looks like a skinny wick down here, but it could have lasted several hours during this day because this is a 1-day candle. And so probably your bag got filled again after you sold up here. And so what did you get? You got a nice 20% discount. Nice, man. Like you know, you basically got to keep 20% to pay your bills, right? Like you can make a living off trading if you're using some logic. And if your gurus and all those people are warning you, hey guys, like look what's going on up here. Like it's time to sell your QREDO and buy in lower. Like pay for dinner, pay your rent, right? We did it the previous month, right? We paid our rent over here, right? We paid our rent over here, right? And we're going to pay our rent again, right? January, February, March. Like we're going to pay our rent. We're going to make money trade, we're going to make a living trading. And so, your guru should be, telling you about how to balance your life and like what are your goals, right? If they're not, then you're just part of a pump, right? You're just part of a pump scheme. Right? You're part of somebody else's hopium that it's going to go 1,000% up and that they're going to become, millionaires. Well, that's okay. And you might have that goal. You might have that goal. But if you want to feed your family, you also should use these type of principles and not just be caught up in somebody else's, dreams about money. Okay? Because it's not about money. It's about living, right? It's about living. Of course, it's about money, but it's about making money so that you can live the life that you want. And to do that, you have to take profits regularly. You have to take profits regularly because what can happen? You can have a crash that takes you all the way down. Look, whoever was buying in this trade right here, like this looks identical to this. This move right here is identical to this one. Whoever was in this trade got screwed if they didn't follow these principles. Do you understand, why I'm passionate about these things? Why I'm trying to communicate these things to you guys? Because this is how you're going to feed your family, whereas, this is how your family, you're going to get a divorce or whatever, right? Like this is what breaks up families, right? This is what makes you hold a bag for a year, right? While other people are spending it on nice things. While other people are spending their money on nice things. And so let's go to these things again. Oh, okay, look, we have a curvature here, right? It's starting to curve. It's starting to curve around. It's starting to curve around. We're losing momentum, but you know, we're still kind of losing momentum on this one. So maybe it's not the perfect area, but we do have a warning here. You don't have to be a bull or a bear. You have to be both to be a trader. You have to be both. And so you might think, okay, look, hey, look at this. Like, look at this. You know, um, if this MACD starts to flip around, and if this RSI is just kind of like bottoming out, and if the Stoke is bottoming out, then this should give me a warning that my buy opportunity is coming up. My buy opportunity is coming up. And you've already established that you were in a good area. You didn't have your confirmations yet, right? You had them over here. You had your confluences and your confirmations over here. So you were a freaking genius to buy right here. You were a genius because you used the principles of trading. You used the tools that you had in front of you to get that trade. Here, you just used confluence of trend right? The trend, and you got a discount off of the bag that you were already holding, right? And you just, you're still under trend. You're still, you're still in this mini downtrend. You're not in the macro downtrend anymore. You're just in the mini downtrend. But you don't know. It could get rejected again, and it could fall down, right? That's what happened over here. Mini downtrend. It looked like you put in a low. You came back up, but you got rejected again. And it smacked down to the next level down. And so if you didn't have these confirmations, and this is why I'm showing you these indicators, if you didn't have these like absolute confirmations yet where this thing really is kind of turning up, and this is turning up, and the MACD is turning up, if you don't have those confluences and confirmations yet, it's okay not to take the trade. It's okay, guys. Like, I know that people on Twitter and they're gonna be calling you like, they're gonna be calling you names and stuff. They're gonna be saying "fuck the Bears" and stuff like that, and like, haha, like all this stupid stuff like that kids say in like grade school and elementary school to bully people, basically. But you know what? You can use your own logic and your own ideas. Maybe you're waiting for this price, or maybe you're waiting for the confirmation signals, right? So let's say that you get the confirmation signals over here, those kind of confluences of those indicators. Let's say that you get it in the next couple days. Then it's perfectly okay for you to buy up here. Whether your price to buy in is down here or whether your price to buy in is up here, it's perfectly okay because you sold up here, right? Because you're a smart person. You sold up here, so it doesn't matter if you buy here or here, right? If you still believe in this chart and you think that it is acting bullishly, then you can buy in here or here. And you may say like, how can I know? How can I know that the place that I'm buying in is a good one, right? Is a good place to be buying in. Um, well, of course, you have all your, you have your indicators and you have your trend and that sort of thing. But there's another tool that I use, and so this will be just the fourth tool that I give you. And to be honest, you don't need more than that. You don't need more than that. It's called the EMAs. And so I'll show you how I set up mine. Oops. So you see the EMAs, just moving average. SMA means simple moving average. EMA is, I don't know what the E stands for, but it just weights it a little bit heavier towards the more recent price action versus all the price action. And so I use these ones, the 9 and the 21 especially, and the 200 especially. And so right now I have the 9 and 21 on and the 200. These are the colors that coordinate with these ones. So these are the simple MAs, and these are the exponential moving averages, I believe it's called. But they're just moving averages, right? They're just MAs. EMAs are the ones that I prefer. Some people use regular, simple MAs, and it's just your own preference. You can learn it yourself. And you can see they can cross bullishly or they can cross bearishly, right? And when they get pinched off together, you know a movement is probably coming. Not always, not always. They don't always end up crossing. Sometimes the trend just continues, but you can start preparing yourself psychologically in those areas, right? But when they do cross, or when they're threatening to cross, then you can end up having a squeeze to the downside or a squeeze to the upside. And so you probably want to prepare yourself. Now, one thing that we can establish here is that we had a squeeze, to the downside. We had a squeeze to the downside. And you didn't need to know anything about EMAs. You didn't even need to use your EMAs to do that. I already showed you basically what the EMA is calculating, right? You had these lower highs, you had a couple rejections, and then you broke the neckline down, right? And so of course you're getting squeezed down, and the EMAs are just going to reflect that, right? And they're dynamic, so they're going to update. If you got a wick down here, so it just told you buy down here, buy lower, buy lower. This one's saying you're going to have a chance to sell soon, right? Like, like if you didn't buy, like if you bought, you're going to have a chance to sell soon because we're probably going to pump up. Probably. You see, it got between these lines and it pumped up. You can look up EMA strategies yourself. I'm not going to be teaching you EMA strategies. I'm just saying that if you look at these things, you're going to want to kind of see where your support is, right? Where your support and your resistances might be. And so if these EMAs are starting to curve up, and if this is the bullish cross, right, the red one's on top of the yellow one, so the 9 is on top of the 21, and a lot of people use the 10 and the 20, so I'll just say the 10 and the 20, but because that's just kind of the industry standard, I just personally use 9 and 21. So let's say that the 10 is on top, and that's the red one. That's kind of a bullish cross. You can see it's shooting up, right? And if it's threatening to get under, threatening to get under, let me do the replay, right? Right, oop, that was too fast. Slow down the speed a bit. So here you go, right? Like as soon as you broke the neckline, you had this negative curvature on your EMAs. And so even here, you should be able to see it like with these wicks, like that's your first indication. And then the lower high is your second indication. And then the fact that you had a trend line, right, that you could draw between these things, you got rejected here, rejected here. So if you get rejected again, like that's your kind of like the last warning that you need. But you got rejected a couple times off of this trend. And also your EMAs started pointing down. And your indicators were overheated, right? Which indicates that you might start to turn down. Because if they're overheated and they're starting to point down, then what do you think? Like you're probably going to go down, right? Like this is all you need. Like this is all you need to understand this type of structure. And of course, it's more complicated than that. You can make it more complicated, but you can also keep it pretty simple. And you can see a daily squeeze to the downside is coming up. And so what happens? It's squeezed down. Kept squeezing down. But what happened? Okay, so let's just go to the 12 hour. Right? The 12 hour and the daily are pretty similar. It's just you can see a couple extra candles here. So you can see it gets squeezed down, right? You can see, okay, I might be wanting to set some buy orders or something, right? Again, this is like multiple hours. So you have time. You have time to be thinking about this stuff, right? You're day trading. You're on the daily time scale, and you can be flipping between like the 6 hour, the 12 hour, and the daily and the 2 day, just to get an idea of what the chart's doing. So right now I'm on the 12 hour, the 12 hour, just to get a little finer detail. You can go to the 6 hour or something to get even more detail. And then each of these candles would be 6 hours or 12 hours or 1 day, depending on what you set it to. And then you can get a clear idea of when you might want to buy in, right? But the EMAs are going to show you, your direction. It's kind of like arrows pointing you, right? And they'll slightly change, they'll update when your price updates. But okay, you have a really serious cross here. And so it's saying, okay, like you're gonna need to wait for these things to uncross and go bullish again if you want to be in this coin. Okay, look, we're starting like we got this negative cross fully because we got this low here. And again, I already showed you like where you would like figure out where to put your buy. But now you can think, okay, well, do I have a chance of recovering? Do I have a chance of recovering? Well, it's still crossed negatively, and you just got rejected again. So you might think, okay, this probably isn't the right place to be thinking about selling if I got in here. But if I didn't get in here, then perhaps I could buy in here and take some risk. It's a little bit more risk, but again, you have confirmation also. And then, okay, it just goes forward, and then here we are, right? And so, oops. And so now we're here and we're getting rejected once again. And so I can say, you know, is this really, what I want to be in? Well, we're on the 12 hour. Say, this is just flat. These things are just kind of like, well, on the 12 hour, it's giving you that little bit of indication that you could have bought, right? But on the daily, you're still kind of like mixed. You haven't really been confirmed or anything on the daily. But again, like you can use your brain, like we said, to understand that there's the possibility that you could have bought in here and taken that little bit of risk to prepare yourself. But you haven't broken out yet. You can still break down. And so how are you going to figure out whether, whether this thing's going to go up or down? Well, if you're on the daily, if you're trading on the daily, you can see like where do these things cross? Well, what's the number here at the top, right? It's like 270, right? What's the top of this price action? It's approximately 270. And if you'll notice, if you can get above there, let's say if you can get into this range, and again, like you're using the daily, so you have hours and hours to be thinking about this stuff. It's not like you're being rushed into anything. Okay, so if you look at this area right here, like 270 to 275. If you can get there, if you can get your price action to get into that area, or let's just say that it can pump into this area, then what's going to happen? This red line is going to continue to increase, like upwards, bullishly, right? And this yellow line is just going to stay flat and kind of support it. And what does that mean? You have a chance to pump and squeeze to the upside, right? Like this squeeze can continue. Squeeze can continue. And ideally, if your price action can sit on top of this 10, right, this red 10 line, if you can sit on top of that one, then you're bullish again, right? You're bullish again, like super bullish again. If it's staying in between, it's just neutral because it could pinch down and squeeze you down, right? If this one, if you drop too low, you're already squeezing down. I told you, you're already squeezing down. You're below the 21 and you're below the 10. Sorry, the 10 and the 20, right? So you're getting squeezed down still, and you're being held under there. But I'm trying to show you like how you can predict which price point you need to recover in order to keep a bullish crossing. And you can see it. It's just right. It's just the price action, right between wherever they crossed previously, right? Or wherever they're turning down from. So the difference between the price action from when it started to turn down and from what was previously turned up, that's the price that you need to recover in order to start getting bullish again on your time frame, or at least to be neutral. And so you can see we're 262. We pumped up to 278, and so we got into there. We got into there, but we got rejected yet again. So that's one rejection, two rejection, three rejections. And so this chart isn't ready yet. You don't have to feel too pressured. You can buy in on this area because you already sold up here, right? You sold maybe up here. You can wait for a confirmation of a breakout and a higher low before you buy back in. Or you can buy at an absolute value low down here and gamble that this support will hold because it's held so many times, right, already. And you just have a stop loss under your previous low so that if there's a wick, you know, you don't like a wick like this, so you don't just get taken out and then they that they bounce up, right? Like you don't want to lose your position. So you can take a look at where these wicks are, and you can put your stop loss somewhere lower than that, just so that if you're away from the computer and you start dumping, you know, it at least will trigger for you. And, you know, so you could buy in on the confirmation, or you can buy in on the breakout. And of course, the most profitable is to buy at support because you get a little extra, you know, money room, right? But the most reliable is to buy on the breakout because you're already headed in a bullish direction, right? You don't know if this could keep going down. So that's your kind of like the risk that you choose personally in your own style. But people ask all the time, like, you know, do you think we're going to go up, you know, or do you think that we're going to go down? And if we're in an area like this and we're trading on the daily, because we're just like watching these charts every day, then we can just tell ourselves, you know, well, look, how are my daily EMAs? All right. There's kind of this mid area here between the yellow and the red one, the 10 and the 21. And it tells me I need to recapture this area in order to go bullish. And if I'm under that, I'm still turning down. I'm still squeezing down. And I have the potential to even lose my support if I continue to squeeze down. If I don't see these starting to curve back up, if my indicators haven't reached these green points yet, right? And look, this one's turning red. So, you know, potentially we have even more down to come, right? Like your indicators didn't flash green yet. That's why I'm putting these where there's no price action, because you're just looking for those signals. You didn't receive those signals yet. And so if people are pressuring you to buy, you don't have to buy right now. If you took your profit up here, you know, and you didn't get your green signal confirmations yet, you know, if they don't exist yet, we're just looking forward to them possibly happening, then you don't have to buy it. You can buy on the confirmation when you recover a price that's bullish, that returns you to a bullish uptrend, and you have to hold it. You close a candle there. Like whenever you look at these pumps, like there's a full candle, you know, at least, you know, and preferably like 2 or 3 candles. The most reliable is going to be like 3 closed candles. You can't control every pump, okay? You can't just catch every pump, but you can understand the tops are using the logic that we already talked about earlier in this video. And you know, if this just has a random pump up, okay, you buy the confirmation. But if this is just a slow movement, then okay, you can buy the support and just have a tight stop loss just in case, right? Because you don't know where your support is underneath this. We don't really have a lot of support underneath it. If we break down here, like you don't know where we could end up. And again, that's why I put out all these warnings. That's why I talk about these type of things. And you know, other people can like judge it, but again, I've been trading this coin, you know, along with a lot of QREDians who are just like been trading it since over here. And so we may have some intuition on this chart that, you know, of course this thing probably is bullish. We know the tokenomics and all that. It's a pretty good, you know, it's a pretty good play for the long run. But you don't know the market. You don't know the world. You don't know how things can change in a day, right? You don't know if you're just going to break down. So let's look at Bitcoin, right? Hey, look, Bitcoin reached my resistance line based upon fibs, and let me take this stuff off because it looks junky. And look, like we have these type of wicks that are just indicating that we might be slowing down. What happens in the past when we do that, right? We retraced a lot. So if Bitcoin is kind of like getting hung up in something, it doesn't have to be bad. Let's go ahead and take a look at the 1 hour for Bitcoin. Like this isn't terrible. There's nothing super scary about this. Like this is actually a bullish kind of structure here, right? If we zoom in on just like today, well, it looks a little bit worse, right? So the macro, of course, like I don't think we're just gonna like fall to hell based on this chart. Like we have a lot of support, right? We built up this support. We have support from the past, on the past of Bitcoin, right? We have a whole bunch of support underneath us. Like we're probably not gonna just fall to hell like from right here, right? We're not gonna have a straight line all the way down, right? It's highly unlikely. It could happen, but after all of this price action that we've gone through, we have kind of levels, right? We have levels. Like if we turn on the weekly, we have all these levels to kind of consider, where our supports may be. I'm just winging it, right? And then what do we have? Like on the higher time frames, like the weekly, like we're still in this bullish play. So yeah, these things are starting to round a little bit, starting to soften a little bit. Maybe it's going to cross like this, but that's not the worst thing. When these things cross, like they can continue to go for a while. It's not super scary. But should we be aware that it can have a major pullback? Look at this. It went up to here, and then it pulled back all the way down here. What was that? That was like, 12%. So could we have a 12% pullback, something like this? Look, it went under the red line here. So it could go all the way under the red line. Could we come back to like 42,000? Maybe, maybe. You probably don't want to get under 44,000. Like I said, like you can look at your EMAs. Like the lowest you ever want to go is like between your EMAs, like on whatever time frame you're looking at. If you want to stay bullish on that time frame, you don't want to be breaking below this one. So what would I set it as? 44,000, maybe 44,500 is the lowest I'd want to see Bitcoin come. But that means we can have a lot of retracement. And if we can have a lot of retracement on Bitcoin and Bitcoin leads the market, then what do you think like this one on the same time frame, which has a bearish crossing? Bitcoin has a bullish crossing. This one has a bearish crossing. It might get squeezed to the downside on the weekly. And so you could consider that you might be breaking down still a little bit. Look, this has a negative slope on the weekly time scale. On the weekly, we don't even have enough data to understand like where this thing could go. It does look low. It does look like it's an area value, a value area low. But you don't have enough data to even look on the weekly on QREDO. On the 5-day, you can say, okay, you're increasing momentum. That's good. And this is looking good. On the 3-day, you're starting to increase your momentum. That's great. You're at a, area value, a value area low on your RSI. And your Stoke is saying like, hey, if you bought in here, like that was a pretty good play, right? That was a pretty good play. You didn't know that until you got confirmation because this thing could have kept going down, right? This thing can turn down again, right? This thing can dip down again into the bearish control zone. This thing, you know, it's actually a good sign. You can say like all of these are good signs. You're pointing upward. You're out of the bearish control zone and you're trying to point upward. And so, but it's just a question mark right now. But you have kind of this, not great, EMA setup here. Not great. 2-day. Same situation. This one looks like it's going to cross negatively. This one's actually pointed back down into the bearish control zone. This one's losing momentum. So on the 2-day, you're not looking that great. And on the daily, you're pointed down. Your RSI, your Stochh is pointed down. Your RSI is looking like it wants to pop up. To be honest, it looks like it wants to continue upward. But your momentum is saying, we're losing momentum. We're losing momentum. So, what does that mean? Like your indications are all mixed and your price action is teasing, right? You see this wick, it's teasing the middle of your EMAs, which means that you're just kind of stuck in no man's land, right? You're not sure yet. You can wait for confirmation. You can wait for confirmation. And then what's going to happen, right? Let's say if time goes on and Bitcoin returns to being bullish, then you can see how this price action might start curving upward, right? Let's just say that we can maintain, that middle area of 270. Then your price action is going to kind of look like this. Like if I'm just, here, let me simplify this. Let me just, let me get rid of this stuff here. Turn that off. This is your 200 EMA. This chart is so young, it doesn't even have a 200 EMA. It has its 10 and its 20, but it doesn't have its 200 yet. But you can kind of see how the 200 has a direction. You see it has this EMA, it's slightly formed. You can kind of understand its direction. And you can see like it's pointed down in this way. But the general price action, which is just kind of like let's even just remove the prices themselves. Just look at the EMAs. So this 10 and the 20 kind of has this curvature to it, right? And that curvature is threatening, and it's just flat right now, but it's threatening to come like upwards, right? Like if we have anything bullish, if we can just keep that 270 to 275, then eventually this price action and this price action are going to continue to move like this. And this is going to be a squeeze to the upside, most likely. Most likely, right? If you can keep a positive curve, so you see this is downward, and then we reached some type of apex right here at the bottom. And now we're threatening, like we haven't done it yet, we're threatening to put in a positive curvature on these, just on the whole movement of the price action, just based on the EMAs. And if we can do that, then we can have a positive direction here. And if we can get to here, where the 200 is starting to flatten out, then these things are going to come together. And the 200 will start to match the price action of this forward leading price. And where they converge, it has a high chance to pop to the upside. Why am I telling you this? Because I'm talking about, your question. Like, are we going up or down, sir? Are we going up or down? Well, if we get under $2.70, and let's just be extreme. Let's say under $2.50, because this is just kind of like the region we're talking about. We really need to be recovering this $3 area to get that squeeze. And then like we could go as low as like a 250 and all that stuff to get a squeeze down. But we're just kind of like in this area right now. But let's say that we lose 270, that midline, and we start curving this way. Then what's going to happen is your 200 is going to like come down here, and you're going to have a negative on your, on your 20 and your 10, and your 200 is going to be negative, and you're going to get a squeeze, down. You're just going to continue downward, basically. So how do I know 270 is a really important price, right? That kind of area around 270, to 275 is very important to hold because I want to see a squeeze to the upside. I want to see a squeeze to the upside. I don't want to see a squeeze to the downside. Some of that, some of you guys might not be ready for. Some of it is maybe just really basic to you guys, and some of it may be, not perfect because, again, I'm a student, I'm a learner. I'm just trying to convey what I'm learning to hopefully help somebody else avoid a mistake. If I make a mistake in the video, go ahead and let me know. I do believe in this project, QREDO. I think that these were great areas to be DCing in at and also taking profits at. I don't know how the market is going to play out with Bitcoin. It looks like, in my opinion, that we are highly bullishly oriented. And so I would expect for QREDO to eventually recover 270 and 275. And if it does that, then that's going to be, and if it holds it and it can stay above there, then I think it can get into that posture. I think it can get into that posture for the squeeze play to the upside. But if we remain under 270, then just understand, we are going to have kind of like a squeeze to the downside, most likely, especially if we stay under like 250. Okay, we're 260 right now. You don't have to be being pumped by anybody. You can just kind of chill. If you DCA'd in here, cool, cool. If you sold up here, cool, cool. And if you get confirmation up here, in that 275 area plus, then okay, cool. You can buy back in and see if we get squeezed up. And if we break down below 250, and you just want to kind of, chill for a bit. You don't need to necessarily be holding on to your positions, especially if you break under like $2, right? I mean, sorry, not $2, $2.30, right? You don't necessarily need to be holding that bag if if the market starts turning down. Just watch Bitcoin, watch the market. Have a stop loss, right? Have a stop loss at a reasonable number. And I can't give you advice on that. I can't give you financial advice. But that's how I would think about these things. Those are the tools, the basic tools that I'd be using in order to understand. And look, we had a lot of great signals over here to buy in, and we also know how to take profit, right? So you could have already doubled your money just by trading this area as opposed to just holding it. If you had just held it and you had like bought when people were like saying, when they were thinking it was going to do this type of thing, which again, I made that same mistake. I was one of those idiots like saying like, oh guys, like it could be your last chance to buy at $5. Like if I look in my past, like it could be a little bit cringe, right? I got taught a lesson also in this market, and I'm teaching you what I learned so that you don't have to learn the hard way. Because somebody else can be saying the exact same. You see this? You see this path? Right? Other people are just betting on that it's this path. But it's literally the same thing, right? Literally the same thing. Like I thought this was going to happen. They think this is going to happen. And what I'm telling you, what I learned is if you have like the signals to buy in here, use your sell signals. You can buy again and you can sell again. You can buy again and you can sell again. You can buy again and you can sell again, or you have a kind of, you don't even have to buy the middle, to be honest, of a range. You don't have to buy the middle. You can buy the confirmation, or if we go down lower, you can DCA in, right? And if you understand the project and you believe in the project, then you don't mind too much to DCA in at support, right? At some type of support. You have to have a theory of support. Don't just DCA in the middle of a fall, right? But that's up to you. That's up to you. For me, these are kind of my buy areas and my sell, kind of like my macro kind of concepts. And so look, this one extended all throughout here. Like that was buy. I'm not bearish on this. That was buy DCA, right? DCA. And then, this is just purple because it's just like in between sell and buy. So I can play this range. And if we just played this range all day, like we could make a ton of money, right? Well, eventually you get squeezed in and you pop either up or down. So we're gonna find out, do we get squeezed up or do we get squeezed down? I think we're gonna get squeezed up, but right now, who knows? I mean, it could. My bias is that we get squeezed up. Okay, I'm just gonna tell you my bias is that we get squeezed up. And so again, like you can play this range, and if you DCA it in here and here and here, and you didn't sell all of your bag, you just sold what you needed to take some nice profit, then you have something to sell up here in case we do get there. But I was a MOON-BOI before on this token, right? I was a MOON-BOI before, and I had to like sell it like $7 or $9 or whatever. Um, Instead of $20. And I'm just saying, it could happen again. So just think about these things. And don't just buy something because someone's telling you to buy it. Think about all of this process. And as you go through trading day by day, try to put food on your table. Right? That's why we're doing it. And hold just enough that if we do go, we can go and have a stop loss so that if we do break down, you have your liquidity so that you can buy lower just in case we do hit these crazy numbers, right? Which I don't think will go below $2 personally, but if we do, right, you have some money on hand. So you don't sell everything at the tops and you don't use all your money at the bottom. You always have some money to be able to buy lower, and you always have some skin in the game if you believe in the coin, right? If you believe in the coin, you always have some skin in the game so that if we do suddenly pump, you can take advantage of those higher profits. Okay, guys, that was your alpha for the day. Stay safe and happy trading.